हेलो, अस्सलाम वालेकुम। क्या हाल है? आप लोग खैरियत से हैं? आप लोग सोच रहे होंगे कि सर अपन ने मास्क क्यों लगाया हुआ है। असल में इतना कोरोना का खौफ फैला दिया टीवी पे, मीडिया में। मैं वैक्सीन लगवाने के बावजूद भी मुझे डर लगा। तो ये ऑनलाइन क्लास में भी एहतियात जरूरी है, इसलिए मैंने मास्क लगा लिया। ठीक है, ताकि ऑनलाइन क्लास भी जो है वो मास्क में भी जाए। ठीक है, नहीं नहीं, मजाक कर रहा हूँ। कैसे आप लोग खैरियत से हैं? तो पेपर शुरू करते हैं। कल हमने जो है वो आपको एक वीडियो लगाई थी ऐसे ही। एवरीवन इज यूनिक। कुछ शेयरिंग थी, आपसे करनी थी अपने बच्चों से। बारिश होती थी तो मैंने कहा चलो आज पढ़ाई सेट करें। तो आज जो है वो अपना पेपर शुरू करते हैं। वी वर डूइंग A2 जून 2020, A2 पेपर 32। ओके ओके, दिस इज योर पेपर। Now today we have to do question number 3. Inshallah, we'll start with it. This is non-profit organization. The J Club prepares its accounts to 31st December. Okay, so the J Club prepares its accounts to 31st December annually. It also runs a shop for the exclusive use of its members. All shop sales are made on cash basis. The shop takings are banked on the same day. A summary of the bank statement for the year ended 31st December 2019 is as follows. Now, this is a bank statement. Okay, this is not a cash book balance, but this is bank statement. Now, this is the opening and closing balance of assets and liabilities. One thing very important, the bank reconciliation statement for the month 2019 showed that 870 represents a shop taking on 31st December 2019 had not been credited by the bank. So it is going to be added in shop takings because this is bank statement, and bank statement does not include one important shop taking, that is $870. Okay, depreciation is 20%. Okay. Now prepare a statement to show the shop's gross profit and profit for the year ended 31st December 2019. So what we have to do, we move to question number. Now see, we have to start with shop takings. Shop takings. Now see, so shop taking is how much? Shop taking is 49,200 dollars. Dollar 49,000. Plus one item was missing in bank statement, that was $870. So altogether we have shop takings 49,200 plus 870. 49,200 plus 870. This is our shop takings. Okay. All sales are on cash basis is given in the question. Okay. Now, cost of sales. Okay. Come to opening inventory. Opening inventory is how much? Opening inventory is shop opening inventory is $1,300. 1,300. Now, shop purchases. No, we have to be very much careful about this because now purchases Purchases amount is given $15,100 plus shop trade payables ending 2,810 minus shop trade payables at start is going to be deducted 2,740. Okay, so altogether that will be 2,100 plus 2,810 minus 2,740. The answer is 15,170. That is 15,000. Now, closing inventory of shop. Closing inventory. The inventory of shop is 1,100, and that is going to be reported in the bracket. In the bracket, 1,000. And now see, the total we have. Now, total cost of sales we have now how much? Here we are going to report cost of sales. That is 15,170 purchases plus 1,300 minus 11. This is equal to 15,370. 15,370, and we should report it in the bracket because we have to deduct it from the shop takings, and we will get the gross profit. So, first requirement of gross profit is done. Okay. So, what is the amount of gross profit? Gross profit is 15,371. 34,700. Done? Okay. Let's move to other expenses. Shop expenses, and now shop wages is how much? 18,700. Altogether, we have two expenses of shop, which we are going to report over here, and we will be able to calculate. Now see, total expenses of shop is how much? 9,400 plus 18,700. Answer is 28,100, which should be in the bracket. So we don't forget to subtract. 34,700 minus 28,100. Answer is 6,600 short. 6,600 short. Done? Okay, we got one. Now club income and expenditure account. So income, we'll give heading income. In income, we'll write subscription. So how much is the subscription? Now, see, subscription received during the year 78,650. Done. Okay, subscription due at start is going to be deducted minus 1,600. Subscription in advance at the start of the year is going to be added 1,200. Okay. Now subscription due at this end of the year is going to be added 1,900. Subscription in advance at the end of the year minus 400. So total subscription for the year is 79,750. Dollar 79,750. This is the formulas of approved and prepaid, which I have already given in my previous classes. How to use this formula. Now, shop profit. 6,600. Altogether, we have profit of total income. We have how much? 79,750 plus 6,600, 86,350. Total income 86,350. Now, adding expenditures. Expenditures we have first is uh, club administrative expenses. Club admin expenses. How much? 78,600. I think there is no adjustment for that. 78,600. Yes. Dollar 78,600. Now, second is uh, yes, we have to calculate depreciation. Depreciation calculated 20% using the straight line method. Now cost is 40%, 40%, and depreciation is 20%. 8,000. So this year's depreciation is 8,000. Okay. Depreciation 20%. Now total expenses, total expenditures 78,600, 78,600 plus 8,000. Answer is 86,600. 86,000. 86,000. And it should be in bracket, so we remember that we have to subtract it, otherwise we will forget. Okay. What for 86,000, 86,350 minus 86,600. 250 is what tax. 250. Okay, we got 5 numbers. Now prepare a statement showing the movement in club equivalent for the year ended 31st December 2019. Now what we have to do, we have to calculate accumulated fund at the start of the year. We will deduct this deficit from that and we'll get the accumulated fund at the end of the year. It's very simple now. Okay, so how we are going to start it? Now at the start of the year, take all the assets of the start of the year. So on January 1st, 2019. January 1st. Now, all the assets. Now, we have bank at the start of the year. Bank at the start of the year is 9,800. Then shop inventory. How much? 1,300. Now shops subscription due. Shop subscription is 1600, and then club equipment, club equipment. Negative book value. This is 8,000. Done. Okay. Next. Now total assets. Oh. 1,800. 1,600. 20,700. 20,000. Now heading liabilities. Liabilities. We have shop trade payable. Shop trade payable. Start of year 2017. Now subscription in advance. Subscription. Deducting all these two liabilities. Fine. Okay. Let's start. It is on 72 minus 27 minus 16,810. Less. So 250. Sixteen thousand. Getting my point clear. Okay. Now this is it. We got 3 marks. 3 marks we have. The straightforward difference between prime system and the prime system not for profit. There is a sales of limited liability company. In prime system we include sales. In prime system we put up we have cost of sales. We do not have cost of sales. We calculate profit. We calculate profit and loss. We calculate surplus 20%. Okay. And number 4 is financial statement of the equity, shareholders equity, and we have equity. Okay. Now move to the next question. Next part. All the club equipment purchased from the club is 2020. Subsequently, the first and the most important thing, this is the last year of the life of the asset. It might be in use after fully depreciation, it might be in use. But the thing is, we cannot, we have to replace it because it's fully depreciated. Now. We can use it even after its useful life. It's still, it can be used, but the useful life is the first and the most important. Second thing, the club is showing deficit. Third, most of the subscriptions are paid by the most of the subscriptions are paid. And very small amount is due, not a very big amount is due from them. So the company we have only bank balance 15,900. So we are not in a position at this stage to replace the club equipment, which is very necessary because the club has the equipment is completed slack. Now, the treasurer of the club proposes the club could increase member subscription to finance and replacement of the club group. If we increase member subscription for this purpose, what will happen? It might be possible that members will not be agree or they will leave. The first and the most important thing, the first and the most important reaction we should consider while we increase subscription is members will not be happy and leave. We can have we can arrange equity also. We can arrange for the loan also, but we do not have that big assets or the club is not in a position. The bank will loan. It might be possible we can take loan from the members, non-interest bearing loans, or we can add new members in the, or we can ask some rich members to pay to give us special donation for the replacement. Okay, now come to question number 4. Okay, see the question. Question 4. Financial year of WPLC ends on 31st December summarized total assets in the draft statement of the financial position. Non-current assets 5,56,000, current assets 2,24,000, total assets 7,80,000. Following information is also available. Current ratio 1.6:1, gearing ratio 12, debt to equity ratio is 12.5%. Answer the following question. Question paper questions are printed here for reference. Okay. Prepare the summarized equity and liability section of the draft financial statement of financial position of WPLC at 31st December 2009. Now, while computing the other part, we should remember through current ratio we will find out current liabilities. Through gearing ratio we will find total liabilities. Non-current liabilities. Current ratio will give you current liabilities, and you must remember the total equities must be equal to total assets 780,000. Okay, so it's not a difficult question. We can easily find it. Now, see how to calculate current liabilities. Current liabilities can easily be calculated. Total assets are given $224,000 divided by 1.6 the ratio. The answer would be dollars. Answer is 40,000. What about this is current liability? So if we know the total asset is 780,000, so total equities must be 780,000. Okay, now minus 140,000. The current liabilities we get the answer 6,40,000 is equities and long-term liabilities. Total we have available now 6,40,000. Now debt to equity ratio. Again, debt to equity ratio. It means after deducting current liabilities 1,40,000, we have left 6,40,000. The total 640,000 non-current liabilities plus equity means capital employed 6,40,000. So gearing says is how much gearing 12.5%. So 12.5% is your liabilities. Now non-current liabilities in your capital employed. That is number 12.5%. So 80,000 is your long-term liabilities. And now we know total assets and total equities are same 780,000. 780,000 minus 140 the current liabilities minus 80,000 the long-term liabilities. So your equity would be 500. Done. This is the other part of the statement. And if you get the totals, if you get the totals over here, same as 700. Done. Done. Okay. Now, next section. The non-current liabilities were represented by bank loan obtained in 2000. The interest is 5% per annum. Return on capital employed was 22.5. Our capital employed was non-current as non-current liabilities and uh, non-current liabilities and equity. 560,000 we calculated equity. 80,000 we calculated. And 6,40,000 is your return on capital employed. So your return, your profit would be when you calculate 6,40,000. 40,000 multiplied by 20.5%. The answer would be dollar return on capital employed. Now what you have to deduct over here, less interest. Interest on bank loan is 5%. So interest is 80,000 bank loan multiplied by 5%. So that would make interest. Keep it in the bracket so we can calculate. Now see. So you yes. Right? Done. Okay. Now come to the next point. Hardship. People with dark statement of changes in equity for the end December, the total column is not required. In statement of changes capital, we have headings, share capital, sorry, ordinary share, then premium, then we have called general reserve, and then you have okay. Now at the start of the year, start ordinary share capital was given is given in your requirement, that is $200,000. Premium is given $35,000 and general reserves $21,000. Here we do not have written earnings. Okay, just leave it. Okay. Now, 100,000 ordinary shares were issued at 1.40 per share. Okay. Now 1.40 means with premium. So new issue would be initial value would be 100,000, yes, and premium would be on 100,000 multiplied by 4, 40,000 is your premium. Leave with the retainers. Okay. Now, in December, to have a bonus issue of one ordinary share for every 6 shares one had made the result while maintaining their most flexible form. So we have issued bonus shares. So bonus shares 1:6. So 300,000 divided by 6. So we have to issue 50,000 shares. Yeah, 50,000. And this 50,000 is going to be deducted from here. Okay, then 18,000 were transferred to general reserve. How much? Bracket. No, it is 18,000. Going to be deducted from the retail. Oh, final dividend was paid. The dividend cover for the year was 2.5 times. So dividend which we are paying over here, dividend 2.5 times means 2.5 times of profit. So draft profit is 1,40,000 multiplied by 2 times divided by so dividend is going to be deducted over here. Done. We do not have the starting balance of the table. Be careful about that. Okay, we don't care about it. What is the starting balance? Okay, now profit for the year. Profit for the year is added to retained earning 100. And now see, at the end of the year, at the end of the year, what is happening? At the end of the year. We have now ordinary shares 350,000, share premium 35 plus 40 minus 50. 25,000 is premium on shares is left. Okay, reserves 21 and 18, 239,000. And okay, now see the what we calculated last time. We calculated what here? What here? The total equities, the total equity, only equity was 560,000. So it means 560,000. So 560,000 minus 350,000 or issue capital minus 25,000 is your premium minus 39,000 is your general reserve. So it means the leftover of retained earning is 146,000. So 146,000. Now what you have to do, if you move in the backward direction, 146,000 minus 140,000 plus 56,000 plus 18,000. So 80,000 is retained earning at the start of the year. Then this is it. Okay. Now move to next question. On 18 before the draft financials were presented to the audit was found that one of the customer was 8,000 and receivers tried to declare backward. Define the meaning of the term adjusting events and non-adjusting events, adjusting and non-adjusting events according to IAS 10. Now, according to IAS 10, adjusting events are those providing evidence of condition existing at the end of the reporting period, whereas non-adjusting events are indicative of conditions arising after the reporting period. Adjusting events, according to IAS 10, for those events which we expect can occur, favorable or unfavorable, uh, before the date of making financials. Or non-adjusting events are those which only indicative. We do not have prior any evidence. So what happens? Uh, this is the definition of adjusting and non-adjusting. You might be given notes by teachers. Very good teachers are teaching. Very good accounting teacher. Okay. Now, explain the appropriate accounting treatment of the amount owed by a customer declared bankrupt at 31st December 2000. Now, this is adjusting. This is not knowledge. Because we have issued invoices to the customers during the year, before the making of financial statement during the year. And before financial statement, according to prudence concept, when the customer can become bankrupt anytime. And according to prudence concept, we have to prepare. So this is an adjusting event and it should be adjusted according to the prudence concept. This must be adjusted at the end of the accounting period. This is not normal service. And that gets because all the customers were getting the invoices. And now after giving the advice, there was a chance and there was a chance, and now we are sure that a customer is completely bankrupt. We have to show this given in the financials. Now, so okay, question 5 and 6 we'll do in our do tomorrow, inshallah. So that's all for the today. Take care. Please subscribe my channel, and inshallah I will also I will keep uploading some informative and funny videos for the betterment of my students along with the accounting videos. Okay, all my beloved students, thank you. Take care. अपना बहुत ख्याल रखिएगा. अल्लाह हाफिज.